Good evening, everyone. This is Henry, and as we get into tonight's free video, I wanted to share with you a couple of concepts that I am working with as we head into the witching expiration. So December 16th will be the third Friday of the month. It will be the final monthly expiration of the year, and that brings in these witching expirations. Essentially, they are moments in time where I like to look for, or at least consider the potential of, range-bound and somewhat neutral trade. Now, we have to take this a day at a time, and of course there's no guarantee that it will work. But let me show you how this way of thinking is in line with what market makers are doing, and we're going to start by looking at an example in Disney. So with Disney, we began the thought process for myself really on this move, right? The return of Bob Iger as CEO was met with a very bullish result. But you can see that that big up day ran right into the 618 retracement of the previous decline, and more so the things that I want to be watching for into these expirations is the activity around the centennial value, right? 100, if you're long from 90 or long from 87, selling some at 100 probably makes good sense. Not only is there some of that from the stock perspective, but there's that retail trader that may have a tendency to chase this, the market maker that is going to sell the call to them, and then of course they have a vested interest in keeping it below that price. So what I'm wanting you to think of is on movement like this, that sideways trade from that point is one of your higher probability outcomes. Think about that in relationship to where we are now and what I am considering to be support and resistance. So let's just use some round values here, and I'm going to say the stock closed around 95, you can use 96, but essentially to say support is 90 and resistance is 100. I feel like that's what you can see on that pretty basic chart. But then if you want to take it further, again, this is where you can see where market makers are basically agreeing with this. Let's give ourselves maybe $1 of leniency, 70 cents, and say into the December expiration, the expected move is about $6. It's a little shy of that, but that would leave you with support at 90 and resistance around 101, 102. So I believe that's been an effective trade in Disney for a couple of weeks. If you can see how that has played out, you can see this next place of consideration in Apple. So I like to get these values from swaggy stocks. There's a few places you can get them, but you got to remember all of the information is in the chain. So generally it's not something you're going to pay for. It's just something that is aggregated for you. So again, we pull up here with Apple, and I want to look at this for this Friday and then also for next. So if we look at the 12/9 expiration, you'll see that max pain there at 146. Look at where we closed today, right? Kind of all over the place. But at the end of the day, what's going on? It is the contraction of that straddle over time. And if you think about that into next Friday, the 16th, with max pain at 150, this is a similar situation where I think we're going to be inside these ranges over the course of the next 11 days, and being aware of that will hopefully either help you cater to a spread that makes more sense around that, or at least keep that directional opinion maybe a little bit under wraps. Again, let's say we're closing here at 147, the expected move being about $7. So that would give you resistance at 154. That's how I like to think about resistance as derived from the chain, right? You're just taking the closing price, the estimated move, in this case into the end of the monthly expiration, and that's how I got 154. When you look at it on the chart, this is right in line with this tree line, which is another method that I like to use for effective definition of ranges, and then about the same thing on the other end, where 147, $7 lower, would put you right in line with that 140 support. So in a lot of videos, I'm going to try to call direction for you or give you the next directional setup. But for these examples and into expiration, I think considering the potential of range-bound trade, wanting to put on trades that are theta positive will be a couple of things that help keep you on the right side of the market. So I hope that's helpful. Have a great rest of your evening, and I hope to see you in one of the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.